What is going on, everybody? Today I'll be doing a voiceover for the live session I recorded for you guys from yesterday. Here we have NASDAQ, where I'm annotating this consolidation in price of what liquidity still lies in this area. As you see, I'm annotating all the swings that got purged, and as we see the top line here, these two lines are the last areas holding liquidity from that range. So I'll be looking for price to trade up into that. As I take a position here off this impulse fair value gap, classic YouTube model, easy 2-to-1. Now we wait for price to expand. Notice the candle bodies closing outside of the fair value gap. Clear demonstration of order flow. As you see, as I typed out for you guys, I'll be looking for price to close above those consecutive down close candles, making a bullish order block, possibly trading back down into it. Price expanding here. Buy side purged, TP hit for this trade. Now I was looking for possibly a run higher because we do have fair value gaps above us, but I was not looking to target that because liquidity above those two pools have been purged in previous runs. So for me, I was looking for price to come back down into this inefficiency and possibly see price expand higher. I was still looking at that order block and fair value gap. As I mentioned, we had inefficiency above us that I thought we could run. Here I'm just putting all the makeup on the chart. Like I said earlier, candles were still respecting bullish PD arrays, so order flow is bullish. This is your first sign of possibly bearish order flow stepping in. Candles moving to close inside of bullish PD arrays. Obviously, as more candle closes after the open came in, we jumped to the 5-minute. I updated my PD arrays to 5 minutes because the lower time frame order flow is subordinate to higher time frame order flow. That's right here, your first indication that order flow is flipping. Even though we are macro bullish, bearish, DXY was still bearish at this point. So I was not ready for order flow to be bearish on index markets as well at the moment. But here you have your 5-minute candle completely trading through the 5-minute order block. So now this is a bearish turn shift in market structure. On this time frame, like I said, we have the 15-minute order block annotated, and like I said, lower time frame order flow is subordinate of higher time frame order flow. So I'll be looking for the next candle closure to be closing below that 15-minute order block. Now, as I mentioned here, price is displacing off of liquidity on the open. 5-minute is now bearish, testing a 15-minute PD array on the last 5-minute candle of the 15-minute time frame. So now that we close below the fair value gap, we have displacement, we have fair value gaps created, we have a breaker block in place. So sell program has begun. Oh, I apologize. The previous 5-minute candle was not the last of the 15-minute candle. This 5-minute candle will be the closing of the 15-minute candle. Yep, so I would like to see ideally a close beyond that 15-minute order block. What I was looking for in there when I zoomed into like the, I believe that was like the CPI inefficiency from the previous month, was I was looking to see if there was any smaller targets, if I can fractalize a target. Inside that range, but it's just all inefficiency until we get to that order block, which is down there at 11,130. So there you have the breach of the 15-minute swing low. So now the 5-minute order flow has flipped the 15-minute. So new ranges are created on these time frames. I'm looking at a return back into the range after a shift. It doesn't necessarily need to be now. I was looking for a revert back into the range to fill inefficiencies and mitigate the breaker prior to continuing bearish order flow. As I do mention though, taking that trade as is, the R is too low for me. It's sub 2 to 1 at the breaker. So that would not be a trade I execute live. So dollar here, we see that dollar took sell side liquidity. Here you see the deviation from the range, and now you have bullish shift in market structure with the volume imbalance inside a daily opening gap. So this is what I was looking for. We have equal highs. We have our YouTube model set. So I think that dollar weakness would help index markets come up, as well as the strength off the imbalance there would take us back down. For here, I was checking up on other things I was interested in. This was GU. I wanted these equal highs purged, and then a shift in structure to take sells. We didn't get that, so there's nothing there for me. EU here is interesting. Sell program like index markets. I don't like that first low was ran out, but you have relative equal lows, but it's technically a high resistance liquidity run. As you see, index markets are reluctant to push higher even against weak dollar here. I believe this is where I begin to lose interest in index markets here, and move over to currencies. And dollar exclusively. This is me checking ranges below the low-hanging fruit targets. So for me, we have a 3 drives into a fair value gap and breaker block here that I don't believe I annotated, also using 830 as resistance. Yeah, like I said, I'm just cleaning up my chart here. Liquidity has been ran there. Trade idea was good. Price did not present an opportunity to participate. Maybe to be later mitigated, but this is just the AM session. So I won't be covering that anymore. But for me, I did take this trade right here. Breaker block respected. Creating another fair value gap. I just have to move the line, but I do sell short in here. So now that we have closures outside of the void, this is where I want dollar start using the daily opening gap as support. Price is holding us inside of it for now, which is totally okay. We do have the newly created 5-minute fair value gap there. So this is where I inevitably collapse my position. I didn't like seeing that we tapped into equal highs, and then dollar wants to come back into this daily void. I believe that we could still draw into the volume imbalance, and I don't want to be caught giving my profits away after I've already won for the day, thinking that price on dollar could draw lower and euro can inevitably draw higher, which we see that here that it does not. Price maintains candle bodies respecting the fair value gap, and on EU as well as DXY, and DXY starting to expand here. So as I'm typing out for you guys, previously mentioned, I did make you can say the wrong decision because I closed my position prematurely, but on a day where I've already made money, I'd rather preserve the money I have made than risk to get more. So from here, moving forward, this is just, I do put on a demo trade for you guys. We have a newly created 5-minute order block created that has purged liquidity. So now when price trades back up into it, we can use that order block as entry. As I mentioned, it's going to be a demo trade. I wouldn't personally take this entry because I just closed out a position here with a better entry. So for me, reopening the risk just it doesn't make sense to me. So here we have our entry, and I did make a mistake here, and I'll narrate it when we get there. But if you look here, you know, what is my order block, and if I'm using my order block as an entry, where should my stop loss be? That's the hint I'll give you. You can pause it and look around, but I did make an error there. Here I'm looking for dollar not to have any candle closures inside of the daily volume imbalance, the large pink box. I want to see that act as a strong support. So here we see my demo trade get stopped out because I used the swing high of that large down close candle and not the actual order block high. See those 3 consecutive up close candles? When we go back to that time frame, the 5 minute, yeah, for me here, there's still really nothing. We're creating low resistance liquidity run, which could be coming in later, but until price gets up into that inefficiency and breaker block, there's nothing there for me. But here you see those 3 consecutive up close candles prior to the 1 minute for that or 5 minute for value gap being created. That is our order block. I should have been using my stop up at that where I just annotated that line. That is the order block high. So that is a mistake that, had I taken this trade live, would have resulted in a loss. But yeah, let's see if the thesis is still correct. So this doesn't materialize into anything worth noting. I wouldn't be interested in longs there. Just observing another creator's model possibly play out. Going back to EU, starting to get some expansion. Candle bodies still getting closures outside of the void. Dollar using that daily opening gap as support nicely. Now I believe this is where we begin to get some expansion. So that would be take profit 1, and take profit 2 is obviously that second black line. I put this up just to show you guys my mistake. And re-annotate the order block for you guys. So price seeks a short-term premium by coming back above this low that they just rated. So that wick power met. So now we've accomplished a short-term premium here. So now price can continue to expand sell side. And here comes expansion. This is going to wrap up the session for me. It's about 11:30. I think it's important to let you guys know, even as a consistent trader, a knowledgeable trader, a profitable trader, these mistakes still happen. Discretion is very important to keep us out of bad trades. And yeah, it's not always glory, even when you know what you're doing. You can make mistakes like I've shown you here, and still make money, as I've also shown here. So I hope this was helpful for you guys. I hope you have a good day. And that wraps it up. Be good.